Hey everybody. Sorry I'm a little late there. I'm still waiting for our guests. They've yet to show up, so hopefully they'll show up before in the next few minutes. But welcome to the Epic Real Estate Investing Show. Oh, there he is. Perfect. All right. So where are we at? Yeah, we're here at the Epic Real Estate Investing Show. Yeah, had to remind myself of where I was at my own house. This is where we show people how to escape the daily grind and retire early. And today we're going to talk about the shifting market a couple times today. Actually, I've got later on. I've got planned another episode about 2 hours from now, as there's so much happening. There's major shifts in just the last couple of weeks, and more stuff, incredible stuff, just in the last 24 hours. And so later today, I'll be covering how the media is lying to you daily, which you probably already know about all kinds of stuff. But I'm specifically talking about lies to us as real estate investors, and um, how their lies could be causing people to make really bad financial decisions. And I just don't want that to happen to you. So let's make sure that they're not manipulating you, and that you understand how to interpret the data and the stuff that they're sharing accurately so you can make good decisions. And I'm talking about stuff around foreclosures. I'm talking about stuff around the housing inventory. I'm talking about stuff around inflation. Oh my gosh, the news today on that. And the impending market crash, which everyone seems to be talking about. So, and so much other stuff. And since I scheduled that in just this last 24 hours, I mean, we're going to talk even more about where the deals are moving to, where you should be focused. Is this even a good time to be looking at real estate? Because that's a big question on everyone's mind. Could there be something better out there? And then I'm going to share with you a new strategy that worked this week that I kind of pulled from my history. This was like 12, 13 years ago as a real estate agent, and combine that with a creative financing pitch that I have for sellers. And I put the two together, and it resulted in two deals this week for REI ACE clients. I got on the phone with their leads and was able to just take this one simple little approach around the shifting market, and it resulted in two new contracts this week. So I'm going to share that with you, and so you can go ahead and copy it and mimic it and use it in your market and crush it too. Alrighty, because overall, there's just a smarter way to view the news when it comes to their reporting on the real estate market. And so I'm going to go live with that today at 2 p.m. Pacific Standard Time. I sent out a notification earlier, but had the timing wrong and sent it out Eastern Standard Time. So sorry about that. But we're going to go live at 2 p.m. All right. So please join me then. Now, right now, I want to look at this market from a different angle, specifically when it comes to deals, when it comes to money, and the mindset to win in this shifting market, because it's going to take a different mindset. And I've invited a new friend of mine to chime in as he's discussing these subjects. He's been discussing these subjects for a while, and he's going to be sounding off here today about the real estate craziness. So please help me welcome Mr. Henry Washington to the show. Henry, welcome to Epic Real Estate Investing, sir.
Hey, thank you for having me. This is fun. Let's do it.
You bet. I mean, we haven't even started yet, and you're having fun, so this is fantastic.
Yeah, man, I've been sitting here listening.
All right, good. Well, I'm glad you made it. And this is our first time meeting. We have a mutual friend that said we had to connect, and so I'm glad we're here. So, tell me a little about yourself. What's your history? What's your background? And how did you end up here?
Oh man, so I am I would call myself a buy and hold investor. I started buying property in 2017, really out of panic. Realized after working corporate for a while that I didn't have any money, and so I got married and was looking for a way to supplement some retirement, build wealth for my family. And um, what happened was um, the wife wanted things that I couldn't provide, and I was like, well, I need to start making some changes. And so, long story short, found real estate through Googling after having a panic attack one night, and said, you know what, I'm going to figure out how to do this real estate thing. It seems like people are figuring it out. If they can, I can too. And bought my first house like 90 days after having a panic attack, which was late 2017. And then after I bought that first deal, I basically used monopoly money to buy it. We leveraged my wife's 401k for the down payment, bought a house that was cash flowing, had equity in it. Then the bank called me and said, hey, do you want to take out a loan against that equity so you can bring us more deals like that? And I was like, oh, yes, I do. And so I went from a panic attack about money to like having a cash flowing asset, and then the bank giving me access to like 25 grand to go buy more in like 90 days. And I was like, wait a minute, this isn't a strategy I need to supplement my retirement with. This is a strategy I need to use to retire now. and
Right,
so,
right.
and so we've been going big ever since then. And so we're, almost 5 years in now. We've got about 70-ish doors. From a rental perspective, we flip about 10 houses, 15 houses a year. And that's essentially what my business looks like. I'm small multis and single families mostly,
Very
and
good.
family business, man.
Awesome. Are you, may I ask, are you still with the wife? Did she hang out and stick with you?
Yeah, yeah, absolutely. I retired her about a year ago, and then
Okay.
I retired right before her, and so now we do this full time. And I started coaching and teaching, and then was blessed to be asked to be a co-host on the Bigger Pockets podcast. So I co-host with them from time
Mhm.
to time, and so I get to do all kinds of cool stuff now because I had a panic attack and decided to buy a house.
Sweet. Yeah, no, I'd asked that question because when I got out of the music business, and that money stopped flowing, and then we had to file bankruptcy. The wife didn't appreciate that, so she took off. So I was unable to keep mine until
Yeah.
I got mine figured out a little bit too late.
Yeah.
But I found a better one, so it always
Well,
works out.
good, good, good.
Yeah, absolutely. Super. And then you even said something right there. This I resonate with the panic attack thing. Is a even like to some degree every once in a while. As an entrepreneur, it can be a lonely business. There's a lot of we get a lot of freedom. We get to be our own boss. We make good money, but a lot of stresses and stuff comes along with that too.
Hmm.
And so I want to talk about that as we go into the shifting markets. I think that might be impacting some people. But thanks for
Absolutely.
sharing. Thanks for being here. All right. So deals. So I went through and did a little bit of research before we got to meet,
Uh-oh.
and I saw that you've been. I think you got your own podcast, and you've been a guest on several, and I looked at others. So I looked at all these different subjects that you're talking about, and so one thing was deals, finding off market deals.
Yep.
So let's before we talk about the deals, what is your view of the market right now? I mean, because a lot has changed just in the last 24, 48 hours, and it was already changing a couple weeks before that. So what are you seeing?
Yeah, man. Real estate's cyclical. It's always been cyclical. What we're seeing now isn't really new. Maybe the things that are driving what we're seeing now is new, but real estate's always been cyclical. You're either going to be in a market where deals are hard to find, but it's easy to get money,
Hmm.
or where deals are easy to find, but it's hard to get money. And
Right.
we've been over the past, you know, 3 months or so, we've been shifting from one to the other. So now it's starting to become an environment where traditional banks and even small local lenders are starting to tighten up. They've still got some 2008 PTSD, and so they're starting to tighten up. And so money, even hard money lenders, private lenders, they're all just watching and starting to tighten up just a little bit. And so money's getting harder to find, but deals are becoming more prevalent.
Hmm.
As an investor, we're in the market of buying deals, buying situations, right? We buy situations that tend to have houses tied to them. And so, it doesn't matter if a market's hot, cold. Um, uh, there's always going to be people who need to sell, not want to sell. And when
Hmm.
the financial landscape is more treacherous for people, then that creates even more quote unquote situations. And so deals become more prevalent. And so, I'm starting to get more calls of people saying, hey, can you buy my home? Versus, a year ago, I had to go make all those calls. That
Hmm.
just means there's more situations. And we're trying to get proactive around how do we position ourselves from a dollars and money standpoint, access to capital standpoint, so
Right.
that if traditional lending, because I typically use small local banks to fund most of my deals, and so my banks are still lending, they're just requiring more from the borrower than they typically would.
Right.
Um, and so, accessing, so there's some things working in our favor right now, and that is that even though supply is increasing week over week, in my market especially, there's still not enough supply to meet demand. And I'm fortunate enough to be in an area of the country that is growing substantially. And so even if um, supply is increasing, so are the number of people who are moving here every day. And so I'm in a situation where real estate prices aren't really coming down. Days on market is increasing, right? But things are still selling. I'm still selling things. I'm just not selling them in like one day with 14, above asking price offers anymore. um, and so what I'm seeing in my local market is that you need to prepare yourself by getting access to capital because the deals are coming,
Mm-hmm.
and you want to be able to continue to buy. And yes, even if prices come down a little bit, as these situations are more prevalent, that means your entry prices can be lower. And so, even though I was selling extremely high before because the market was allowing me to, because people were paying for it, now people may not pay as much, but I also paid less for that property. So my profit doesn't really
Mm-hmm.
shift much. So,
Right.
um, prepare yourself by finding access to money is what we're focusing on.
Perfect. So what you're also saying though is, you might have to reevaluate how you are comping out your deals,
That's facts.
right?
Yeah.
So if the money is harder to find, then that means you got to find better deals to
Yep.
where that money isn't so nervous,
Yes.
right? So
Exactly.
as I'm seeing right now, and it's kind of what I'll be touching on a little bit later, but I'm really talking about this with all of my students that, you have, if we just took like the traditional vanilla um, wholesaling quick and dirty math formula, right? You multiply by 70%, you subtract your repairs, you subtract your profit, and then you're going to have your cash offer. But you're starting with that after repair value number, and that's today's number.
Mm-hmm.
But if you're going to be doing the fixing and flipping yourself, or you're going to be selling it to a fix and flipper, you really have to kind of project what's that after repair value going to be 2 months, 3 months, 4 months from now, because that could be a very different number if the trend that we're seeing right now continues. So you're going to have to buy your deals deeper, right? So you got to
Absolutely.
get really good at the comps, is what I'm seeing, and finding uh, it, kind of shifting your definition of what's a deal. Because if we messed it up 6 months ago, the market saved us, and we were still able to save it, and we looked like a genius, right?
Yeah.
Now we got to be real estate investors again, and we have to really understand the numbers and how that all works. So with the deals, you say your phone is starting to ring a little bit more with some incoming inquiries, and we certainly just saw that in the last 48 hours here, 72 hours. People that said no to us just 2 weeks ago,
Mm-hmm.
all of a sudden said, "Wait a minute, how did that seller financing thing work again?"
Right.
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 So, what's your main resource? What's the main pool that you're fishing in for your deals right now?
Yeah. So we do direct mail marketing and cold calling is typically what
Okay.
we're doing. Over the past couple of years, I've really expanded my kind of marketing pool. And so I just really focus on finding people with equity, that have the footprint size house and or multifamily that I'm looking for.
Mm-hmm.
And I don't really filter for much motivation anymore because I found that um, I can afford to cast a wider net. And if I cast a wider net, then I find all kinds of deals in different situations. I've bought properties that needed absolutely no renovation and that were in really good neighborhoods that were built in the 2000s, 2010s, right? And those are properties that would have filtered out of my search before, but now I just sold one that I had bought that kind of fit that criteria. And so what I found is that in my market, if they have equity, I want to send marketing to them, and then we will figure out, um, what kind of offer makes sense for them.
Got it. What market are you in, by the way?
I'm in Northwest Arkansas.
Northwest Arkansas. Okay. And you just said like you're not really fishing for motivation right now.
Mm-hmm.
So what is it? How is that turning into a deal for you if there's not like a seller that needs to sell? Is it just the numbers work out in your market, or is there something else I'm missing?
No, no, you're not missing it. We're not filtering for motivation, but the people I'm buying from have motivation.
Ah, got it. So your marketing, your initial screening of who you're sending to, who you're calling, you're not filtering for motivation. You're just going for
Correct.
equity.
We're just going for equity.
Got it.
Because when I was fishing for certain motivation, I felt like I was leaving deals on the table for maybe other types of motivation that weren't in
Mhm.
my search. And so instead of trying to get super fancy with all the different types of motivation, I just broadened my search in general. If you've got equity and your property is a footprint size type that I feel like I would like to buy, because obviously those first time home buyer type homes are the ones with the most buyers, right?
Mhm.
If you're going to flip a property, and even if you're going to rent, those are the ones that people like to rent. And so, if your property fits that footprint and you've got a decent amount of equity, then you're probably hearing from me.
Right. And I would imagine that's probably going to be even more effective now because people that interact with or come up to a situation where they find themselves where they need to sell, right?
Yep, absolutely.
Um, the things that are causing them to need to sell, which are the traditional things we look for when we're trying to filter for motivation, those things haven't hit databases yet.
Yep.
Is that what you're finding? So that's starting to make
Yeah. Yeah, we're starting to see people that maybe we talked to a while back are getting back a hold of us, or just by reputation alone of being somebody that buys distressed properties or situations. Like, I'm getting people that are reaching out to me and saying, "Hey, like I just bought a deal last week that my title company sent to me because they heard that someone might want to sell their property, and it was a property again built fairly recently, all brick, great property, clean on the inside. They just want it out, and they want it out quick. And so
hmm
we
hmm
bought that. I'm changing some light fixtures. I threw some carpet in a couple of bedrooms, and we're sticking it back on the market. Like, it's just the situations are there.
Sweet, sweet. So the broader net, right? Traditional marketing channels, and it's just bringing in more opportunity just by nature of
Yep.
the of what's happened, right?
Yep. Now, if you're brand new, I don't recommend just starting with such a broad net. It's expensive. Like, marketing to a broader audience is going to cost you more. I
For
think you
sure.
should niche down if you are just starting out. But I've been in, 5 years in the business. We do multiple deals. I'd much rather just cast a wide net at this point.
Yeah, it's the best way if, like
Yeah.
you're saying, if you got the means, right?
Yeah.
Super. All right. So deals, nothing really changing there, but expect a whole lot more opportunity if you just
Mhm.
stay consistent with what you've been doing. Second thing would be money, because money's
Yep.
getting more and more expensive, right?
Yep.
And so
Absolutely.
you say you're working with banks. Or any other sources of money?
Yeah. I started to look for some private money options maybe about 6 to 8 months ago. We started looking, and so we brought on a private money lender that we tested out a couple of deals with earlier on. So even though I could have got pretty favorable financing from a bank, I wanted to test financing some private money with this guy to build some trust, so
Mm-hmm.
that if the environment changes, that he and I have some history. And so luckily that we took that approach. We weren't the whispers weren't as loud as they are now back then, and so
Mm-hmm.
I'm not saying I'm some genius who started to do that. It just kind of all fell into place at the right time. And so now we're working. We've got a private lender we do some deals with. I still use the small local banks for certain deals. I've got relationships with a couple of hard money lenders. I haven't done a deal with them, but we've had the conversation so that if I need to shift, I can shift over to using them. And then we've also been leveraging lines of credit, both secured and unsecured. And so one of the benefits right now is that, yes, the market is shifting, but in a lot of areas of the country, the values of property haven't come down much, if any, from where they were 3, 4, 5 months ago,
Mm-hmm.
right? And so if you've got a property that's got equity in it because you owned it before this crazy, spike in prices happened, it's still a good time to be able to look at leveraging a HELOC and get a line of credit against that equity, just in preparation
Right.
for as you're searching for properties later. Because the beauty of a HELOC is you don't pay anything unless you use some of the money. And
Mm-hmm.
so just having access to it doesn't cost you anything but the closing costs for that HELOC, and then you've given yourself some buying power for deals as they come along later. And so you can still get favorable appraisals on these properties because values haven't come down or haven't come down much in certain areas. And interest rates are still, I know people, they have doubled from where they were, but they were like crazy low, like we've never seen before.
Yeah.
And so going from 3 to 6, like it's still 6. It's not that big of a deal, y'all.
Here's the other thing where I think people are getting a little bit concerned about the interest rates, and it might be misguided or misdirected attention. Is that there's very few times in history where the interest rates are lower than the inflation rate.
That's right.
Very few times. And we have our interest rates have doubled, but our inflation rate is quadrupled. As of this morning, we're at 9.1. You're borrowing money at 6. That's a net negative 3% you're getting paid to borrow money.
Yeah, man.
There's not a better, you have to take advantage of this opportunity. So I don't know. I'm preaching to the choir, I know. But,
no. I say it again for the people in the back, man. I
get excited on the stats, man. And I start geeking out on the economics. And when I was a younger investor, I was just like, it was all about the flip and how much cash could I put in. And then I started to really understand how wealth is created and how the economy works and how you want to be on the right side of the economy. The the powers that be are
freaking out.
Telling you that look at the cost or the wage increase has gone up 3% here, 5% there, and I'm like, but inflation is 8%. You're still losing, right? But if you own real estate, you're way ahead, regardless of what you're paying the salary.
It's the best hedge. And yeah, inflation sucks. I get it, right? And just the argument that kills me is that like interest rates are too high. I shouldn't buy real estate right now. And I'm like, well, within perspective, 6% is still pretty cheap for money, and you get to lock that in for 30 years. My parents paid like 12, 13%. So like, chill out. It's not that bad. And then B, like half the people that are saying that have like a MasterCard that they're paying 25% interest on, like without blinking. So I don't want to hear it.
Right. As you look at what the interest rates are doing to the affordability index, right? It's pushing some buyers out of the market. I just saw something that said that the number of cancellations of contracts is increasing because rates are changing in the middle of their contract.
Yeah.
But if you like what you said earlier, like the supply is not going to have some significant boom to where it meets the demand. We've got many more people than we have housing right now. And one of the stats I always point out to is, we're the peak age of the baby boomers is 29 years old, and the average first-time home buyer age is 31. So that means over the next 24 months, we have more demand for housing than we've ever had in the history of the country, right?
Yep,
and so when we're also operating with this 10-year deficit on the supply, like the building has been so contracted for the last 10 years. My point being, there's a long story, but my point being is, as the affordability pushes people out, well, we have too many, they still got to live somewhere.
Yes.
So they're going to go rent, right? And so I can really see this whole bidding war thing move from the sales market over to the rental market because they need a roof over their head. And so this is the time where you want to have investment property, right?
Absolutely. If there was, it's in my eyes, it's always a time to buy. It's just a matter of what you buy and how you buy it that changes, right?
Sure.
And you're 100% right. We just put a duplex on the market that I would say, so we had a tenant in it, but a tenant in one side, and then we had rented one side out, and so we rented one for $1,200, and it might have took me like 3 weeks. I didn't get very many inquiries. Well, we had both sides available right now, and we listed it for 12 again, and I couldn't, like the amount of emails that I was getting and requests was insane, and I was just like, what? Okay, so I clearly underpriced this, right? Like it's just nuts, like the demand for rent right now because of exactly what you're talking about, and it's going to continue to go up because rents always follow pricing, and they're a little behind it. So you've got landlords who are locked into leases right now who haven't had a chance to raise rents yet, and those leases are coming due. Yeah. And if they have to do a renovation on that property, or even just a light renovation, fixing it up, materials cost more, labor costs more now than it used to. And if they got to put more money into it, you better believe rents are going to go up. And so if you can get your hands on something, man, now is the time.
100%. All right. I'm always looking for people to come on the show that I disagree with, but it's we're total alignment there. So going into this new market, and I have a unique perspective, and you probably do too, as a coach, right? that you're out and you're buying deals and you're selling deals. We have a turnkey operation, so we kind of have a different type of consumer there that's coming in, the busy professional, the doctors, the lawyers, the just the people that got jobs and too busy to go out and do it themselves. And then I also got people that come in and want to learn how to do it themselves.
Mhm.
And so I'm getting kind of a picture, a grasp of the mindset. And there's a lot of, even though there's a lot of people listening right now that probably agree with us and don't really doubt us, but when it comes time to actually take the action, there's still a lot of nervousness. There's still a little bit scared. There's a little uncertainty, right? So as we go in, I'm trying to like share with people, like, this is the time you really want to start buying.
Mhm.
Right? The last 3-4 years when they're all riding high and everything and everybody wants in, it's like that might not have been the best time, right? Now it could be a much better time as the deals become better, and now shoot, I don't know. You buy low, you sell high, right? And
That's the goal.
so this is when the time you want to get in. What is the right mindset? How are you talking to people? How are you not necessarily convincing them, but how are you getting prepared for what's coming?
Yeah, man. So for me it all starts with a decision, right?
Mm-hmm.
It's genuinely making the decision in your mind and in your heart that you are going to be a successful real estate investor, right? No caveats. No, I'm going to be a great investor in this market or in a down market or in an up market or in 6 months. Or no, just I will be a successful real estate investor. I will buy a property in the next 3 to 6 months. If you write that down every day, say that every day, you will have to worry less about the how, and because the how is what's scary. It's what's scaring people. It's what's keeping people from jumping in because they understand the market conditions are, changing. They're different. They're scary, right? There's a war. There's inflation. There's all these things that are scaring people. There's a a pandemic still. Like there's all these things that are scaring people, and they want to know how. How can I do all this, giving all these things? And the answer is there's no perfect answer, right?
Mm-hmm.
But if you tell yourself, I will be a successful real estate investor, you decide, you make a decision. The sub, the when you break down the word decide, right? The suffix of that word is side, which means to kill off, which means there's no other option. You're doing it. And when you tell your brain that, you're programming your brain to go and figure out how, right? And the way it does that is now that you've decided you're going to do it, right? Everything you listen to sounds different.
Mm-hmm.
Everything you see looks different because your brain's trying to figure it out, right? And so maybe you listen to this show and you go, oh, Henry talked about small banks. That might be the perfect strategy. Let me go call a couple of small banks and
Mm-hmm.
see what kind of loan terms they have, and maybe it's perfect for me. Maybe it's not, right? Maybe you're reading a book and something jumps off the page at you and goes, oh, that's the perfect way for me to get into it in my market, right? But you've got to program your brain to start listening for those things, right? And it's all a big mindset like trick that you need to do to tell yourself, right? Quit trying to like line up all the pieces and just decide you were going to be a successful real estate investor. And it's I forget what they call it, but it's the red truck theory, right? Like if you want to buy a red truck and you don't ever see a red truck on the road, I promise you the day after you get a red truck,
Yeah.
every other truck you see is going to be a red truck. There's no more red trucks today than there was yesterday. Your brain's just programmed to find them
Right.
now,
That's
right?
your reticular activator.
There you go.
Yeah. The part of the brain that's
Yeah.
responsible for awareness.
So
Yes.
train your flux capacitor to look for red trucks.
Your flux capacitor. Sweet, sweet. Well, so how is your business changing, or are you changing anything? Or you just staying the course? What are you doing to prepare, or are you just like
Yep.
same thing, business as
Yeah.
usual?
So we talked a little about it. So how I'm finding deals, not changing. That's never changing.
Mm-hmm.
How I'm funding deals, that's going to change sometimes, right? Because it's dependent on somebody else making a decision. I can say I want to use bank money all day long. If a bank says I don't want to give you any, then I can't use it, right? So we are doing exactly kind of what we talked about earlier. So I am lining up secured and unsecured lines of credit. There are tons of small banks out there, and they can be small on a scale of just local to your town, small on a scale of a region of the country, right? Look for banks with like 3 billion or less in total assets, and call them and see if they A, do commercial loans for investment properties and what their typical loan terms are, and B, do they do unsecured lines of credit? Some banks are still doing that. I just got access to $100,000 line of credit through a regional bank, no docs,
Mhm.
unsecured. I just had to provide them my articles of organization and answer some questions about my business, and they gave me access to $100,000, which I can
Mhm.
use to invest if I choose. I don't have to pay interest on that money unless I use some of that money, right? And so we're stacking up money in the event that traditional lending dries up. If it doesn't, and I can keep using my bread and butter investment strategy, then I'll do that. But
Mhm.
if not, then I have some other options. And so we've got a couple. We're preparing unsecured lines of credit. We're preparing secured lines of credit. We're working with business lines of credit to be able to leverage using your business credit so that the debt to income doesn't affect my personal credit, but I still have access to the funds. And then as deals come up that are just can't miss, I need to buy this deal, I need to do it quick, and these banks aren't moving quick right now because they're scared and they want to underwrite the crap out of everything, and it's gonna, they want urine samples and blood types and all these things to verify the numbers, and you might just need to close on something quick because situations typically require you to close quick and to pay cash sometimes. And so we're just preparing for that, and
Right.
it's a good time to do it because we haven't fully hit this kind of spot where the banks are just going to say it's going to be really hard for you guys to get money, guys. Right now they're still
Right.
doing it.
I think there's one thing when people come into real estate, and there's a lot of people that want to get started and they think money is their biggest barrier. That's the biggest hurdle. Like, if I just had the money, I could go out and do this. And I think what people fail to realize is there's another side of this business. The people that got the money, they're like, I wish I could find more people that had better deals that I could give my money to.
Yes, yes.
Right. So is maybe money is tightening up, maybe. It's certainly getting more expensive and incrementally, but it's moving kind of quickly. But still, if they can't find someone to give their money to, they go out of business. They don't
Yeah,
want to not give
yeah.
you money.
They have to lend.
Yes, they have to lend. They get up every day and they kiss their spouse goodbye and go off to their little lending store.
Yeah.
Like, gosh, I hope somebody calls me today that's got a deal that I can give my money to.
Yes, they have to
Right?
lend. Absolutely. Deal flow. Those are
100%.
the two big if you can solve both of those problems, you can write your own ticket in real estate.
Mm-hmm.
Deal
Mm-hmm.
flow and money flow.
Yep. And I really believe that in today's market where supply and demand is so lopsided,
Mhm.
the person that has the deal under contract actually has more control and more power in the transaction than the money person.
That's right.
Yep.
That's
In
right. Absolutely.
100%.
For the exact reason that you said, is that like, especially the smaller banks. That's why I talk so much about them, because like they've got to lend to small businesses to stay in business.
Yep.
And yes, they might tighten up, but if they tighten up too much, where are they going to make money? How are they going to provide a return?
Correct.
And so continuing to build those relationships, and if you can bring a good deal, like it doesn't matter if the market's crazy. If they go, well, you're wanting us to lend on something and that you're buying for 200,000 that we clearly believe is worth 400,000, we're probably going to lend to you, because if you give up that loan and you don't make your payments and they take control of that asset, they'll make way more money selling that than they ever would off your interest payments.
Right. Right. For sure. All righty. So, Henry, it's been a pleasure, and I want to tell everybody how to get in touch with you if they want to stay connected with you. But here in the next hour or so, I'll be coming back and discussing how the media is lying to all of us in a way that it could really cause you to make some very expensive financial decisions. And so I'm going to be talking about foreclosures. I'm going to be sharing a bunch of data and stats. It's not going to be opinion based. We share the housing inventory, what it's really doing, what the inflation is actually doing, and what this market crash, is it coming or is it not? And we're going to talk about all that stuff, where the deals are going, where to focus. Is this even a good time to be looking at real estate? We'll be talking about that. And then I'm going to share with you something I did this week with a couple of REI ACE clients, where I took an old strat of me as a real estate agent when I was 14, 15 years ago, and how I used to talk to sellers and get them to lower their price, and then combine that with the creative financing pitch that we've been doing over the last few years, and how those things are going to work really, really well together. And it proved to work the first 2 times we used them this week into new deals for our clients. So tune back then, an hour and a half or so, and I'll share all that information with you. And Henry, it's been an absolute pleasure. Let's do it again. If people wanted to get in touch with you, what would be the best way for them to do that?
Hey, thank you, man. Yeah, best way to reach me is on Instagram. I'm at the Henry Washington on Instagram, or just check out my website, henrywashington.com.
All right. You are the Henry Washington.
The Henry Washington.
Oh, gosh, I've been talking to the wrong guy the whole time. Very good. It was nice meeting you. And gosh, I wish I was on Instagram still, but they kicked me off, and I still have no clue as to why to this day. But
no.
Anyway, enjoy over there, Henry, and we'll talk again. And thanks for being here. I appreciate you.
Thank you so much.
You bet. Take care. All righty. So that is the end of the show. If you found this valuable, who else do you know that might too? Because there's a really good chance that you do know someone else that would. And when their name comes to mind, please share it with them and ask them to click the subscribe button when they get here. And if you haven't done so, please do that. And I'm going to take great care of them. I'll take great care of you and always give it to you straight. All righty. God loves you. And so do I. Health, peace, and blessings and success to you. I am Matt Theriault.